Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Paris milling wheat and London UK feed wheat. I'll start with Paris milling wheat. This market still has four main levels of congestion, and right now it looks like today this market may be making an attempt to leave all four levels below and behind. They are a narrow band 267 to 269.5, another very narrow band based around 260 even, a wider band between 250.5 and 255.75 that contains within it the 2013 high at 253.5 and the 50% Fibonacci of the whole of the 2021 move at 251.75. And finally, there's a wide band, quite diaphanous, between 237.5 and 247.25, within which we have the congestion from late August to early September. Now, unlike some of the other grain markets, we really only have the one head and shoulders pattern dating from late October, early December 2021. And I'd reckoned on calling this one a topping pattern as recently as last week. However, things look like they may be starting to change, just because of the actions of this week. You see, the overall activity since the break below the neckline, currently at 279 even, had been bearish. I'd even placed a primary target X in the 255.5 area, and prices had even started to approach target X. However, last week, and especially this week, I've started to see prices move up through the narrow band 267 even to 269.5, then most notably on Monday, and then again today, over the upper time of the bearish late December 2021 to late January 2022 bearish Andrews pitchfork, currently at 270.25, and today over the declining short medium moving average, currently 274.25. Now, so far I can still look at this move up over the upper time as a breach rather than a thorough break, but I would find it very, very hard to justify it as a breach if we had a consecutive close over, say, come Monday. Thus, I am prepared to retire that bearish Andrews pitchfork next time. That leaves the one other pitchfork, the breached bearish shift pitchfork for the end of November, late December 2021 move, as still being in operation along with a new possible pattern that I had speculated upon last time. Going back to the bearish shift pitchfork, we are currently in between the middle time, that's currently at 268.25, and the upper time, currently 279.75. Though we seem to be moving more towards the upper time with alacrity today. Now, I would normally start warning about this pitchfork getting ready to be breached. However, the upper time has some allies in protecting it as a resistance. They are the 2012 high at 279.25, the neckline of the head and shoulders pattern, currently 279 even, and the flatlining medium moving average, currently 278.25. Hence, whilst I suspect the upper time may be tested and even broken, it may prove to be a hardier resistance area than it would provide on its own. Finally, there is, in the last few sentences of my commentary from last week, what may provide a new pattern to look at, and I quote, "There is an alternative pattern potentially waiting in the wings. I've not marked it on the daily chart, well, I have now, as it would further confuse an already confusing chart, but we have a possible late December to date descending triangle pattern. I will keep this in mind, especially if yet another pitchfork is forced to retire," end of quote. There, prescient words, if any, as I am close to retiring one pitchfork and staring at the possibility of retiring the other one as well. This descending triangle, currently 286.5 to 259.75, may well be the core of my next weekly commentary. London UK feed wheat. So, I'm still using a line chart for most of the action here. Well, that's okay, it sometimes helps with the patterns. Anyway, we do not have any head and shoulders top patterns here. Instead, we have three pitchforks, two bullish and one bearish, that are fighting for the soul of this market. I say were, as one is about to be retired, if it carries on the way it has done this week, and one has been reassigned from an acute bearish Andrews pitchfork to a shallower bearish shift pitchfork. Okay, so the two bullish pitchforks originate from the same early September 2021 to mid-January 2022 action. They are a bullish Andrews and a bullish shift pitchfork. The bullish Andrews pitchfork is close to retirement, as we have seen effective closes below the lower time, currently at 220.95. well, for a few days now. Thus, if we continue to see this, then next week it will be gone. Meanwhile, the shallower bullish shift pitchfork for the same move is still operational, just, with the lower time currently at 213.15, a little below what looks like an extremely supportive rising medium moving average, currently at 216.25, and I'd pay special attention to that. These two supports, the lower time and the medium moving average, are key to the survivability of this pitchfork. If it is to survive at all to survive at all as a bullish incentive. Then if it does survive, its immediate overhead challenges start quickly. We have had resistance from the short medium moving average, currently 219.75, but this has seemingly passed and may now be some light support. Next is the upper time, currently 220.75, of the reassigned bearish late November 2021 to mid-January 2022 shift pitchfork, which took over from the more acute bearish Andrews pitchfork for the same period. However, this is already being tested and may be on its way to retirement. If prices just hold the current levels next week, then that will be it. Then there's the November 2021 to January 2022 50% Fibonacci line at 222.60. And then we have the big thick congestion band in the 227.30, which contains the 2012 high within it. However, there's one big factor in favor of the bulls, and it is that this week is a weekly key reversal up. And this is not to be sniffed at, as it may be the final feather that tips the scales. So, these are the forces that are at play here, and they may well turn out to be substantial, as it seems the downside has some interesting supports and the top side some competent resistances. This has prompted one other thought which I voiced last week and wish to echo again this week. What if the January action is a diamond pattern of sorts, or the December 2021 today action is a possible reverse head and shoulders pattern in construction? I'll think more on these a little while, I think. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.